All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Tuesday, everybody. Today's April 8th, 2025, and we got ourselves a bounce this morning. Dow futures are ripping higher this morning, 1,100 points to the upside. The NASDAQ, the S&P are along for the ride. Everybody is doing great this morning. European stocks are up. Asian stocks are up. Dogs and cats are getting their own place. I don't know. They're not living together anymore. I didn't really hash that out. So is it over? Is the trade war over? Did we all make peace, sing kumbaya, and everybody's going to be getting along great in the sandbox? No, that did not happen overnight. Actually, things seem to have gotten a little bit worse when it comes to the trade war. Some overtures have been made. Some countries have not retaliated. China, meanwhile, the main target in this, you could argue, is planting their feet, digging in, battle lines being drawn, and you are going to have Buffalo Springfield stuck in your head for the rest of the day now. You're welcome. There's a lot worse things that could be stuck in your head. So we're going to talk a little bit about what's going on. Namely, China has vowed to fight to the end. Some, I don't want to say unusually strong language because China's typically very blustery like that to begin with. A lot of people refer to them as the paper dragon. They're always saber rattling. So not really a surprising reaction. I don't think anybody expected the Chinese to be like, oh, please stop, no more. So China's vowing to fight to the end. They're discussing possible responses. A couple of prominent Chinese bloggers both posted identical text yesterday, which means it was hand-delivered to them by the Chinese Communist Party, talking about targeting agricultural exports from the United States, going after the farmers again. That's typically what they do. By the way, we're probably going to see some kind of farmer relief moving through Congress at some point because if you want to retaliate against the United States, food exports is one of the biggest things that you could target. So look for Congress to be doing something to shore up U.S. agriculture in response to that. Also, while they're increasing their military spending, while paying lip service to cutting spending in D.C., other things the Chinese are considering here, suspending cooperation on fentanyl. That's kind of interesting. I wasn't aware the Chinese were cooperating on fentanyl other than supplying us with plenty of the stuff. On top of that, they're also talking about possibly targeting movies, banning U.S. movies. I don't know. Maybe Hollywood will actually make a good movie for a change. Just a thought. There's some benefits to this whole trade war thing. I mean, maybe we actually get a decent movie out of Hollywood now. And also something about IP theft, mentioning a review of intellectual property benefits in China. Look, China's been engaged in wholesale IP theft for decades now. So I really don't know what a lot of these retaliations look like. I mean, there are obviously threats going after movies, going after IP and the fentanyl, but we'll see. On top of that, you've got China is discussing also. Again, this is all discussions. They haven't actually done anything here. Talking about boosting consumer spending, which means stimmy checks, helicopter money. They're also talking about birth rate subsidies. You know, look, if you're going to subsidize the birth rate while at the same time banning things like imports of bourbon from the United States, all I'm saying is a couple of cases of bourbon maybe helps with that whole birth rate problem. I'm starting to see a solution here. Your cart with my horse, you know what I mean? Like maybe we can make this happen. I'm just saying. We know what causes birth rates these days. We know how that works. I think science has figured out the mechanics of it all. China's also talking about subsidizing exports, and they're also talking about a stabilization fund for the stock market. In other words, the government's just going to buy stocks to keep them from going down. So China's got their own version of the Prunge protection team, if you will, going on over there. Meanwhile, Europe actually offered a little bit of an olive branch yesterday. They offered to go 0 for 0 on tariffs, something of a peace offering there. Trump rejected it outright, said he wants that trade deficit closed. And that's probably a pretty predictable response. Once you saw the cockamamie math that the Trump administration had used to come up with what the tariffs and currency manipulation and other trade barriers was, it was obvious this wasn't just about tariffs. When he held up that placard and those numbers and when they figured out the formula, it was obvious what Trump was really going after was the trade deficit. So just going 0 for 0 on tariffs is not going to placate Trump. Anybody could have seen that. really he wants that trade deficit closed. And Trump came out and just outright said that. He said, I want the deficit closed. Buying $350 billion worth of our energy is an easy way to get that. It's a pretty tough pill for the Europeans to swallow, buying $350 billion of energy, especially when they want to build windmills and solar panels and unicorns and rainbows to power their grid. But Trump, for now, appears to be planting his feet. He wants that trade deficit closed. Meanwhile, South Korea, this is interesting. South Korea is preparing support measures for industries disrupted by tariffs. No retaliation from South Korea. They are the second country to do that. And I think I know what's going on there. We'll talk about that a little bit later. Meanwhile, Trump has ordered a review of the Nippon-US Steel merger. This news broke yesterday, and U.S. Steel was one of the best performing stocks in the market, up 16% yesterday. Now, look, Trump spoke out against the Nippon-US Steel merger. President Biden blocked it. It was one of the few things the two agreed about. But it looks like they're trying to rework the deal. My guess is the Trump administration is going to try to get Nippon to take a minority stake in U.S. Steel so that it's still a U.S.-controlled company, but at the same time still getting that capital investment from the Japanese. Also, we've got more automotive news. We've got prices heading higher. A lot of dealers are talking about price increases and scaling back production. I know a lot of people didn't like the sound of that when we talked about higher car prices in that interview with Tommy from Car Concierge Plus a few weeks ago. But all the data I've seen since then supports those prices are heading higher. And we got some crazy news from Porsche this morning. Some Tesla-like numbers coming out of Porsche this morning. I'll show you that one towards the end of the show. Guys, we got a lot to talk about once again here. So why don't we shrink my big melon of a head? Let's see what's happening in these markets here. And don't forget that like button. And for you new guys, hit that subscribe button because we do this every day. Trade war or no trade war. We're here going through markets every morning. So come have your coffee with the melon heads. And right now, it is a very green day on Wall Street. Stock futures are bouncing significantly, 140, 150 points to the upside, 3% higher and climbing here. Look, is this the end of the trade war? Almost certainly not. My gut tells me this is a dead cat bounce. We're probably going to see a lot of this stuff. And guys, this is a case study and why you need to be careful going out on leverage. If you watch that 2-day sell-off and then you piled into some levered ETF to short the market, you are getting clobbered right now. So be careful and when you go out on that limb. Meanwhile, we got the Dow 1,190 points higher ahead of the open. Also 3%, almost 3.1% to the upside. And the NASDAQ is higher by 511 points, 2.9% higher here, pretty much at the high of the morning. Stocks are up across the board, guys. And it's not just here in the U.S. Let's look at some of these foreign exchanges, which we don't typically do, but since the trade war started, we did. We got the German DAX, that's up by 3%. The British FTSE up 3.3%. The CAC 40, that's the French index, up 3.1%. The Spanish IBEX up 3.07%. Look at some of these Asian markets here. The Shanghai Exchange up 1.5%. The China's A50 up 2%. The Hang Seng up 1.5%. That's after falling 13% the day before that. I would add these moves up in Asia seem to be a lot more muted. So the Asian shares, they are participating in this rally, but to a much lesser extent than the Western shares are at the moment. Looking over at the DXY, it is lower this morning, 103.01. That's off by 48 basis points here. So slightly weaker dollar. That's putting some upward pressure on stock indexes this morning. And looking over at the bond market, guys, you got to watch this bond market. I don't know. WTF happened in the bond market yesterday. We'll talk a little bit about that in this next article that I got. But something was up yesterday. We had one of the biggest moves I've ever seen on the long end of the yield curve, and it was in the wrong direction yesterday. That's the thing. And it's continuing to a lesser extent this morning. We got yields are up across the board. When stocks are selling off, you typically expect yields to fall because people run for safety in the bond market, but that wasn't happening yesterday. People were also dumping bonds. It had all the hallmarks of somebody big blowing up. And then in the middle of the day, I did that video yesterday. We had that fake headline that the Bloomberg terminals ran about a 90-day pause in tariffs. That ended up being fake. I was seeing a lot of screenshots of people saying certain brokerages weren't working. I was having a hell of a time getting the charts to work yesterday morning. I don't know quite what was going on yesterday. I suspect we haven't heard the full story there yet. But the move in bonds is continuing this morning. Forget what stocks are doing for a second. Bonds are still selling off here. The 30-year Treasury, 4.646. That's higher by 5 points. Remember, bond prices moving lower sends interest rates higher. So all this green is actually selling off in bonds. The 10-year yield, 4.234. That's higher by almost 8 points. The 2-year yield, 3.819. That's higher by 8 points. And the 1 month is a fraction of a point higher at 4.318. Now, we got this one in Market Watch this morning talking about record volume for bond ETFs in the market route. And they're quoting Jim Bianco, the head of research at Bianco Research, who is an excellent account that I follow on X. Some interesting tidbits in here. Monday's Treasury sell-off, which saw the 30-year bond jump 20 basis points, its biggest one-day rise in 5 years, was a tell your grandchildren I was there day, reckons Jim Bianco of Bianco Research. He notes in a post on X that the volume in the popular iShares 20-year Treasury bond ETF, or the TLT, beat its previous record by 25%, trading $51 billion in assets. Bianco also addressed market chatter that the slide in bond prices at the start of the week may have been caused by foreign holders of treasuries, particularly China, dumping their holdings as they grew frustrated with the Trump administration's policies. And Jim says no, foreigners were not selling treasuries to punish Trump, he wrote. If they sold enough treasuries to swing yields as wildly as they did today, the subsequent selling of dollars to exit the U.S. would have driven down the dollar. Instead, it rallied more than usual. This suggests that foreign money was moving into the U.S., not away from it. The selling was more domestic and more concerned about inflation, he added. So possible, I don't know about the concerns about inflation. I do have concerns about inflation. I do think prices are going higher because of the tariffs. I'm not so sure that's what drove the bonds higher yesterday, but that's a great point about the DXY yesterday. A move that big in the bond market, if it was really foreigners selling our debt, we would have seen the Dixie tanking yesterday, and we didn't see that. We also didn't see any big moves in the yuan. We didn't see any major weakening of the dollar versus the yuan yesterday. So it wasn't foreigners selling our debt. And not for nothing, I don't think they would want to do that either, because selling their own debt, remember, their banking system is every bit as dependent on the U.S. bond market as our banking system is. The Euro bond, Chinese banks need dollars too. Playing games with the U.S. Treasury market in this trade war, that is when this economic war goes nuclear, all right? That is the mutual assured destruction of economics, is crashing the U.S. bond market on purpose. So I don't think we get there, at least not yet. There's a whole lot of escalation between here and there. Now, looking over at commodities, we got a lot of green this morning. Gold is higher by $36. Spot gold, $3,018, up 1.18%. Spot silver is ripping this morning, $30.44. That's up by 89 cents, 3.06% higher. I like the shiny. Meanwhile, we've got copper is up by 2.6%. Platinum is up by 1.6%. Palladium up by 1.7%. And even oil is along for the ride this morning, 1.3% higher. WTI futures for May trading at $61.53. Also, we've got Bitcoin is a little bit higher this morning. It was very briefly back above 80,000 here, but once again back below 80, trading at $79,944, higher by about $800 versus this time yesterday. Again, Bitcoin, one of the big risk assets, one of the most over-levered assets. So this one is going to go up and down with the tech stocks for the time being. Also on Bitcoin news, guys, keep an eye on this one here. This news just broke this morning. The Justice Department scraps their crypto unit as Trump further loosens oversight of digital assets. The U.S. Department of Justice notified staff on Monday evening that the agency was disbanding a unit dedicated to crypto-related investigations. In a 4-page memo reviewed by Fortune, U.S. Deputy Attorney General Todd Blanche announced the decision, stating, "The Department of Justice is not a digital asset regulator. However, the prior administration used the Justice Department to pursue a reckless strategy of regulation by prosecution." Look, I agree with some of what he said there about regulation via prosecution. You know, if you want to regulate crypto, pass a freaking law to do it. That being said, guys, understand what this means. The DOJ scrapping their crypto units. It is indeed the Wild West. If you are going to venture into crypto, especially if you're going to venture into altcoins, meme coins, NFTs, any of that other garbage, understand you're on your own. There are no regulators there protecting you. Some people might say that's a good thing. Other people might say that's a bad thing. Just understand you're on your own there. And if people decide to commit fraud to rob you, they're probably going to get away with it. So just be careful, guys. That's what this means. All right, let's talk about what's going on in the trade war now. China vows fight to the end on tariffs as it props up markets. China pledged to retaliate against Donald Trump's latest tariff threat and mobilize state organs to send a message of resilience, raising the risk of a prolonged trade war between the world's two largest economies. It's all fun and games until China mobilizes their state organs. You know, you can't have Chinese pancreas going around propping up markets. I mean, what has this come to in this world? The U.S. threat to escalate tariffs on China is a mistake on top of a mistake, the Chinese Ministry of Commerce said in a Tuesday statement, hours after the U.S. president vowed to impose additional import taxes. If the U.S. insists on its own way, China will fight to the end. He's referring to President Trump's threat yesterday to throw an additional 50% tariff on top of the 54% tariffs that have already been placed on China. And guys, if your calculator's not working, that's 104% tariff on Chinese imports if they follow through on that, which they haven't actually done yet. That's just everybody blustering for the cameras. Now, meanwhile, we got this one also in Bloomberg here. Influential China bloggers post options to hit back at Trump. It's important to note that two different bloggers posted the exact same thing here, so this is probably a message from the government. Two influential Chinese bloggers posted an identical set of measures that authorities are mulling to hit back at the latest tariff threats from U.S. President Donald Trump, including levies on American farm goods and a ban on Hollywood movies. The potential moves were shared on Tuesday on social media pages of people including Liu Hong, a senior editor at something I can't pronounce, the website for the official Xinhua news agency, and the possible measures attributed to unidentified people familiar with the matter. Those people are in China too, those familiar with the matter, folks. That's weird. They get around. All right, so those methods include suspending China-U.S. cooperation on fentanyl-related issues. They are going to flood our country with even more fentanyl in this trade war. Okay, good luck with that one. Significantly increasing tariffs on U.S. agricultural products such as soybeans and sorghum. All right, so this is a potential weak spot for Trump here. The Chinese targeting farmers. That is typically Trump's base. Farmers largely supported Trump in the election. Also, that is one of the biggest things that the United States exports to China is agricultural products. So that could potentially hurt the states here. Banning the import of U.S. poultry, again, targeting U.S. farmers. Imposing curbs on U.S. services with China. That's interesting. I wonder if they're talking about financial services there. Banks and financial services has been largely exempted from the tariffs so far. So that's one to watch, the potential curbs on services. Reducing or banning the import of U.S. films. Maybe now U.S. artists will stop kowtowing to communist censors in order to put mandatory Chinese characters into their movies so that the movies can get past the censors in China and get released in that market. I don't know. Maybe we'll actually focus on making decent movies instead of just placating woke mobs and Chinese communist censors. I don't know. I'm looking for a silver lining here, guys. Help me out if you have one. Investigating the intellectual property benefits of U.S. companies operating in China. And that's hilarious because you're probably sitting there saying, well, you ain't got no intellectual property if you're doing business in China, Lieutenant Dan, because Chinese do whatever they want. All those knockoff Gucci bags and all that crap that floods in the market, it sure as heck isn't being made in Europe. It's all being made in China. So, you know, threatening more IP theft, threatening more fentanyl flowing into the country and banning U.S. movies. That seems to be the big take from the Chinese here. But they're also talking about accelerating their stimulus now, propping up markets at the government's expense to counter the tariffs. Another one in Bloomberg this morning. China policymakers discussed measures over the weekend to stabilize the economy and the markets in the face of President Trump's tariff onslaught, including whether to accelerate plans to unleash stimulus to bolster consumption. According to people familiar with the matter, Top leadership and senior officials across government entities, including financial regulators, convened in the last 3 days and considered moving forward some measures that were planned even before the tariffs, said people asking not to be identified. The measures will focus on boosting consumer spending, birth rates, and subsidies for some exports, said the people. China's got a big demographic problem. Their population is actually in decline, and it's accelerating to the downside. Boosting birth rates apparently is one of their stimmy measures. The regulators also discussed details of the stabilization fund to shore up its stock market. In other words, the government buying stocks. Who had that on their 2020s bingo? And for now, officials have concluded that China has built up a sufficient arsenal of tools to support its economy and tide over the current turmoil, the people added. The scale and the timing of the stimulus are yet to be finalized, and the plan could still be subject to change, the people added. And guys, the reason why these tools are already in the toolbox, I would remind you, is because China remains in the midst of a real estate collapse that's been ongoing for several years. The Chinese banking system is not out of the woods. All of those garbage assets, buildings that aren't finished, entire cities that were built that nobody lives in, they're still sitting on the balance sheets of companies and banks pretending like they're worth billions of dollars or billions of yuan. They're not. And so now you've got this trade war on top of that. China's probably going to have to dial up the stimulus here to try to prop up their economy, which means probably eventually rampant consumer inflation is going to hit. Although for the time being, China actually has deflation because of the effects of the real estate market crash. A lot of families put everything they have into real estate, and when real estate goes down in value, the family wealth goes up in smoke and they spend less money. Meanwhile, we've got European responses coming in to the tariffs here. Trump says the EU must buy $350 billion of U.S. energy to get tariff relief. Brussels' 0-for-0 tariff offer is not enough. The European Union will have to commit to buying $350 billion of American energy to get a reprieve from Donald Trump's sweeping tariffs, the U.S. president said late Monday, dismissing Brussels' offer of 0-for-0 tariffs on cars and industrial goods. Guys, this isn't just about tariffs. That's the thing. You could see that from the math, from the formula they use to calculate the other trade barriers. They want to close the trade deficit. The trade deficit has been a huge drain on American GDP for years now, and they want to slam that shut. Trump's comments at a White House press conference were in response to European Commission's President Ursula von der Leyen saying earlier Monday that the EU had offered to drop the bloc's tariffs to zero on cars and industrial goods imported from the U.S. if Trump reciprocated. Asked by a reporter whether the offer was enough for him to back down, Trump said, "No, it's not. We have a deficit with the European Union of $350 billion, and it's going to disappear fast," Trump said. One of the ways that can disappear easily and quickly is they're going to have to buy our energy from us. They can buy it. We can knock off $350 billion in 1 week. They have to buy and commit to buy a like amount of energy. So Trump wants the trade gap closed. That's what he's demanding, not just a dropping of tariffs. Meanwhile, we got South Korea's response here. This is interesting. South Korea to prepare support measures as tariffs loom. Note, no retaliation. They're talking support measures. South Korea's finance minister said on Monday the government would prepare support measures for sectors with urgent needs ahead of U.S. President Trump's 25% tariff, which will come into force this week. Tonight at midnight, by the way, for anybody who's keeping track, is when the tariffs actually go into effect. Minister Choi Sung-mok emphasized the need to analyze the impact of the macroeconomy and prepare support measures for sectors with urgent needs. So look, this is the second country who's talking about support measures, not retaliation. The other one was Taiwan. And Taiwan and South Korea, what's the similarity there? A near absolute dependence on the United States militarily. That's the similarity here. So the countries that really need the U.S. military are not shooting back in the trade war. They can't afford to. That's interesting. Meanwhile, Europe is threatening retaliation while making overtures. Europe has at least made an offer of a deal. It was rejected, but at least they're talking. China, meanwhile, planting their feet, saying, up yours, F you, we will fight to the end, all that fun stuff. Meanwhile, we got this one. Trump orders a new review of Nippon-US Steel merger. This is pretty interesting here, guys, because President Biden blocked this merger. U.S. Steel is a vital company for national security interests. You need steel to make ships, to make tanks, to make submarines, pretty much anything we would need to fight China. And Biden blocked the deal because of U.S. national security risks of losing one of our last remaining steel producers. Now, President Trump was also highly critical of this deal, but now it looks like we're ordering another review of a deal that was already blocked. I wonder if this might have to do something to do with larger negotiations going on with the tariffs. I'm going to skip through a little bit of this here. Both Trump and Biden had opposed the deal over the past year since taking office, though Trump has encouraged Nippon and U.S. Steel to restructure their deal so that the Japanese company would invest in the U.S. steelmaker without fully owning it. So it looks like the way they could get this deal done is if Nippon takes a minority stake, it remains a U.S. company, but they can still get that investment capital. And by the way, coincidentally, that's very similar to the way the Chinese do business. If you want to do business in China, you need to set up a subsidiary there, and it needs to be 51% owned by somebody in China, which very similar to what we're talking about doing with Nippon Steel here. Maybe not exactly the same, but it kind of rhymes here. Nippon Steel executives said they would discuss options with the U.S. government, but that large capital expenditures would only be possible if the Japanese firm could invest in equity. Nippon Steel has said that a joint venture with U.S. Steel wasn't appealing since that would limit the Japanese company from fully deploying its technology and operational strategies. So I guess they're still negotiating here. They're ordering this second review. Maybe this deal is not dead. Look at U.S. Steel yesterday, 16.2% higher on a largely flat day for the indexes. And it's up about another 2.6% this morning. So U.S. Steel stock is ripping on this news. Now, let's talk a little bit about what's going on in the auto market, guys. Auto sales are on a roller coaster ride as tariffs are expected to increase prices. And again, I got a lot of pushback on that video I did with Tommy talking about car prices heading higher because it's pretty difficult to fathom. More expensive cars, they're already so freaking expensive, but every indicator is pointing to just that. Prices of new and used vehicles in the U.S. are expected to notably increase this year amid President Trump's 25% auto tariffs, according to a new analysis from industry experts at Cox Automotive. The automotive data and advisory firm expects the levies to add thousands of dollars to the cost of new cars and trucks, imported and domestic, while also driving up used car prices more than previously expected. Those prices increases are expected despite a potential slowdown in sales compared with prior expectations. The new expectations come as the automotive industry responds to Trump's 25% tariffs on imported vehicles that took effect Thursday, and ahead of additional 25% levies on auto parts that are expected to be implemented by May 3rd. We expect to see declining discounting and then accelerated price increases as the tariffs are passed through and supply tightens, leading to price increases on all types and most new vehicles, Cox Automotive chief economist Jonathan Smoke said during a virtual event Monday. Over the longer term, we expect production sales to fall, newly used prices to increase, and some models to be eliminated. So, guys, the car market is messy. If you're in the market for a car, it's probably not a good time to wait. And check this one out. This one we want to talk about too. Porsche's China sales slump with tariffs clouding the outlook. This is pretty interesting here. Now, Porsche, not something I typically follow that closely, but look at these Chinese numbers. Porsche's China sales plunged to the lowest in more than a decade, further clouding the luxury car maker's outlook as new U.S. tariffs threaten orders in its biggest market. And I know every story now has the Trump goggles and every story is a tariff story, but this has nothing to do with tariffs here. Sales in China plummeted 42% in the first quarter to 9,471 units, the company's worst quarterly result in the Asian nation since 2013, as intense competition from domestic car makers cut deeper into European car makers' market share. And that's the story right there, guys. BYD is eating their lunch. Look at that decline in Porsche's numbers. This isn't an American company. This has nothing to do with Trump or tariffs. This is a European car manufacturer seeing their sales plummet 42%. Those are some Tesla kind of numbers, guys. Now, we saw a similar 41% decline in Tesla's sales in China, and everybody was very quick to say this is Elon Musk's and his association with Trump and the trade war in the U.S. Well, Porsche's CEO isn't an ally of Trump. Porsche's CEO isn't cutting government spending in the U.S. It really looks like this is just these Chinese automakers. BYD is really just pushing everybody else out of the automotive market in China because Porsche has nothing to do with the United States. The worsening slump comes at a particularly bad time for Porsche, which is bracing for a hit from automotive tariffs in the U.S., its biggest market. Without any U.S. production sites, Porsche is among the most vulnerable car makers to the levies. So bad news for Porsche. And the last one I want to talk about, guys, is this one. The art market had an awful 2024, according to Art Basel and UBS reports finds. Look, I'm not going to read the whole article. I just want to give you a couple of the numbers here. Art sales in the U.S. fell by 9%. Art sales in China fell by 31%. In France, down 10%. Germany, 4%. Italy, 10%. South Korea, 15%. Art sales are in decline all over the world. And the reason why I bring this up is that any of you guys remember, it was like 2 or 3 years ago, all of a sudden, all the financial YouTubers started pushing this company called Masterworks. Did you guys, everybody was advertising for Masterworks. And I'll tell you, they offered me money too. And I don't know, I turned down more money than I make on this channel. Let me just put it that way, guys. They were offering securitized art. You could buy shares in a painting on a website that was creating the entire market for this securitized art. And I remember reading through this and just like spitting out my coffee. This seemed like such an awful idea. And I remember thinking to myself, securitized art is proof that we desperately need a recession in this country because there's just too much freaking money sloshing around in the system. If somebody cooked up an idea to sell this and they're offering me thousands of dollars to pump it on my viewers, that was always a terrible idea. I'm really surprised at some of the channels that were pumping this thing, to be honest with you, because the people who were pumping this stuff, in my opinion, were smart enough to know that this was a stupid idea and they took the money anyway. And that's the only reason why I include this. You know, when you see people blowing money on securitized art, run. All right. And we'll be back there again at some point. At some point, the market will start creating these stupid investment schemes like securitized art. It's going to be a while because now we're deleveraging. So this kind of crap is going to go away for a few years. But just be vigilant because eventually the money printer will spin up again and the liquidity will start flowing and we'll see that crap start coming out of the woodwork like it did last time. Securitized art. It's just amazing that was a thing, really. I just want to say thank you very much to Nashville Pasta Man who says Fartcoin is up 20%. Who needs NVIDIA? Look, guys, what happens when the AI bubble meets the crypto bubble? You get Fartcoin. Fartcoin is a stupid altcoin that was pumped by a stupid chatbot that was created by a guy who's not what he claims to be. He uses a fake name and he pumps his altcoin and he is going to cash out and make himself incredibly rich, leaving everybody else holding the bag. So if you want to be holding a worthless bag of fart, go ahead and buy fart. You know, see also Masterworks and securitized paintings. All right. It's just another symptom of way too much money was created. And now people are making money investing in Fartcoin and they're convinced they're smarter than everybody else because of it. No, you're just a symptom of reckless monetary policy. That's really all you are. Thank you very much, Nashville Pasta Man, for the laugh this morning. Fartcoin. What stage? What stage? You know, like the what stage of what stages. JJ Watt, what's going on, brother? He says, not sure how everyone else feels, but I look forward to the remake of Forrest Gump starring Jackie Chan. Oh, is this a comment about the mandatory Chinese characters in every movie? You know what? Case in point, look at like Michael Bay and all the Transformers movies. There is at least one mandatory scene in China with Chinese actors in pretty much every Transformers movie because they just got to get access to that lucrative market. There's nothing like American artists planting their feet in the ground and demanding all kinds of political action be taken in the U.S. because of bathrooms, because of this and that, and then bending over backwards for China's Communist Party censors. You got to love the hypocrisy in Hollywood. A remake of Forrest Gump starring Jackie Chan. Now we're thinking outside the box, JJ Watt, but that's one maybe I'll wait until that one's available on streaming. I probably won't be at the box office for that one. Thank you, JJ Watt. And the Beekeeper is back. He says, demand that the EU buy $350 billion of evil fossil fuels provides them the cover to do so. But Mom, Orange Man made me do it. I like that. I was talking to Mish earlier today, and I was like, who do you think the EU hates more, Donald Trump or Vladimir Putin? That's a legitimate question. I think Vladimir Putin probably still takes the cake there. But if there's one thing that's going to make Putin look a little bit better in the eyes of Europe, it's Donald Trump. That's for sure. And so where else are they going to get it? Maybe they could buy some from Qatar. Maybe they could buy some. We're talking about liquefied natural gas here. Maybe they could buy some from Australia. But if they're not going to get it from Europe because they, drilling bad, can't drill. Norway's sitting on an ocean of natural gas. So is the UK, but they're not allowed to do it. If they're not going to pipe it in from Russia, where are they going to get it from? It's probably going to come from the U.S. And that is a way to close the trade gap. And once again, guys, it's more about the trade deficit. That is pretty clear. And not for nothing, President Trump, since the 1980s, has been banging the drum on the trade deficit. So, it was pretty predictable. I don't think anybody was quite ready for the size of those tariffs. When everybody saw those high double-digit numbers, 54% in China, I think that was a gut punch. The market was expecting the tariffs, but I think people were hoping for maybe a 10%, maybe 15%, 54. And now he's talking about going to 100. This thing isn't over, guys. That's the thing. It's going to get worse before it gets better. We're in the middle of a dead cat bounce today. Be careful if you go out on leverage, because these 1,000-point up days, they will happen repeatedly on the way down. And as they happen, it's market makers are basically collecting option premium from people who got too leveraged. So just be careful. The margin man works in both directions. Thank you, Beekeeper, for supporting the channel. And thank you, everybody, for having your coffee with the Melon Heads once again this morning. Don't forget that like button and that subscribe button for you new guys on the way out so you can come on back tomorrow morning. Thank you very much, everybody, for the super chats and for supporting the channel. I appreciate that very much. Hi, Mom. Hi, Dad. I love you guys. Thank you also to my magnanimous Melon Heads on YouTube and Patreon. You guys rock. Links down below should you feel so inclined. And until next time, live small and dream big.